Hi everyone. In this video we are going to see about financial reporting. So in the first unit of financial reporting we are going to discuss on the topics US GAAP, IFRS and integrated reporting. So what is US GAAP and what is IFRS, and the various statements that are required under the US GAAP accounting principle method and IFRS reporting method. So these are the concepts that we are going to discuss today. So the first concept is US GAAP. So what is US GAAP? So US GAAP is also called as GAAP, which is a full form for Generally Accepted Accounting Principle. So it is issued by Financial Accounting Standards Board, and this is generally adopted by American companies, and hence it is called as US GAAP. Okay, so what is this GAAP? So this generally accepted accounting principles are nothing but a set of rules and regulations that guides companies to report their financial data, which guides the companies to present its financial data or prepare its financial data in a best transparent manner possible. So this is the very purpose of using GAAP in companies. So GAAP is nothing but generally accepted accounting principles. So these principles will guide companies in preparation and in presentation of their financial data. So it ensures transparency and consistency. So the principles behind using GAAP is that it ensures that there is regularity, there is consistency in reporting data, the methods that are used should be permanent, and it ensures there is prudence, there is utmost good faith, and it also makes sure that there is continuous preparation of data, and periodically the financial data are prepared and presented before the stakeholders, and it also ensures all material facts are being taken into account. So this is the principles behind using GAAP. So under GAAP or the generally accepted accounting principles, it requires 3 financial statements to be prepared by any company. So the first one is balance sheet, the second one is income statement, and the third one is cash flow statement. So balance sheet, you all know it provides a detailed information on assets, liabilities, and shareholders' equity. Where assets, it includes all the cash, the fixed assets, the current assets, even intangible assets being reported under assets. While in liabilities, so any amount that the company owes to the third party, that is reported, like loans, borrowings, sundry creditors, all such things are reported under liabilities. And under shareholders' equity, you would see the capital, the net worth of the company. Okay, so under GAAP, what happens is the balance sheet is like presented in the following format. So assets will be shown on the top, liabilities beneath it, that is below, and shareholders' equity at the bottom. So you could see an example of a balance sheet prepared under GAAP principle. So wherein the assets are shown up on the top. So the assets order is like this. You have the current assets, then followed by the non-current assets. While below it, you could see liabilities. So under liabilities, you could see the current liabilities and then the non-current liabilities being reported. And finally, you could see the shareholders' equity, that is the capital of the company, being reported. So this is how a balance sheet is prepared or reported under GAAP. The second statement that is required to be prepared under GAAP principle is the income statement. So under income statement, it shows all the costs incurred, all the expenses and revenue that is earned over a period. The very purpose of providing the income statement is to calculate the net earnings and the losses. And under GAAP, you could see even earning per share being reported. Okay, so how is it prepared? So this is an example wherein you could first see the revenue part is shown on the above, and below it you could see all the operating expenses being reported. Okay, and you could see that you have the income before income tax being calculated, and then income tax expenses would be showed, and the net income is calculated after providing for taxes. You could see earnings per share being also reported under an income statement. So this is how under GAAP income statement is being presented. So you could see both current year and previous year data are shown, a kind of a comparison, So this is how income statements are prepared. The next one is cash flow statement. So a balance sheet is prepared in order to show the financial position of the company. An income statement is prepared in order to show the net income during a period, while the cash flow statement, it reports both the cash inflows and cash outflows. Okay, so a cash flow statement, it follows the following activities. The first part of the activity shows all the operating activities. The second part, investing activities, and the third part, financing activities. So under these three categories, all the cash inflows and cash outflows are being shown. Okay, so this is how a cash flow statement is prepared. You could see it starts with the operating activity, then comes the investing activities, then comes the financial activities. So top, below, and the bottom. So this is how the order, and this is how financial reporting is prepared and presented in international standards. This is especially using GAAP principle. The next accounting principle or accounting standard or accounting reporting methods that's being used internationally, it's the IFRS. The full form for IFRS is International Financial Reporting Standards, and it's been issued by International Accounting Standards Board. So it is again a set of accounting rules that guides the companies in order to financially present and prepare the data. Okay, and GAAP is generally used in US companies, while IFRS is adopted by mostly 120 nations across the world. Okay, and even this ensures consistency and integrity in accounting practices and standards. Under IFRS, it requires 4 financial statements to be prepared. The one is statement of financial position. The second one is statement of comprehensive income. The third one is statement of changes in equity, while the fourth one is statement of cash flow. Statement of financial position is nothing but the balance sheet. Statement of comprehensive income, it's nothing but the profit and loss statement that we usually prepare. Statement of changes in equity, it shows us the statement of retained earnings, while statement of cash flow, we all know it's the cash flow statement. So under US GAAP, it's balance sheet, income statement, and cash flow statement, while under IFRS, it's statement of financial position, comprehensive income, changes in equity, and cash flow. So this is an example of a statement of financial position. You could see it's a consolidated statement of financial position prepared under IFRS. So you could see similarly, it also shows the assets, current assets and non-current assets. You could see the liabilities below it, where the format is like current liabilities first, then comes the non-current liability, and finally it would have the shareholders' equity. The statement of comprehensive income, you could see the revenue on the top and followed by the expenses. Then you could see profit before tax being calculated and profit after tax, which is nothing but the profit for the year calculated. You could also see the earnings per share being calculated. Statement of changes in equity is like this. It's nothing but the change. It shows the statement of retained earnings. Okay, so. And finally, the cash flow statement. So yes, as I already told you, the cash flow statement would have 3 parts. The first one is the operating activity, and the second one is the investing activity, and the third one is the financing activity. You could see the 3 activities: operating, investing, and financing. So what's the basic difference between GAAP and IFRS? So I just showed you an example on how it's been reported. You could see the statement, the naming of the statement changes, but it's more or less one and the same with regard to reporting. But with regard to preparation, there are few differences in usage of GAAP and IFRS, and that's been discussed over here. So you could see GAAP is rule based while IFRS is principle based. Okay, GAAP prefers LIFO method for valuation of inventory, while IFRS it does not recommend LIFO method. Okay, and you could see the intangible assets are valued at fair value when it comes to GAAP, while intangible assets are valued on the basis of future economic benefits when it comes to IFRS. So these are the various preparation changes or differences that has been there between GAAP and IFRS method. So far we just saw the difference in the reporting, but now we are going to see how come it's going to be different when using GAAP from that of IFRS when it comes to financial data preparation. Okay, so it uses LIFO, it does not use LIFO, and you could see only cost model can be used for valuing fixed asset. Okay, while under IFRS, revaluation method in addition to cost model. So valuation of fixed assets, the model used is different. Valuation of intangible assets, the value or the methods that are used to determine the value of the intangible assets becomes different. Okay, and all development costs are expensed out under GAAP. Some development costs are expensed and the other are capitalized. So how we actually treat development cost also differs when it comes to both these methods. GAAP requires splitting of liabilities into current and non-current. IFRS does not make such classification. Okay, so when it comes to liabilities, the GAAP method, it splits, it divides it into current and non-current, while IFRS, it does not prescribe such things. Okay, extraordinary and unusual amount are shown below net income. Such items come under income statement. So this is how GAAP and IFRS differs when it comes to inventory valuation, when it comes to fixed asset valuation, when it comes to determining the intangible asset, when it comes to treating development costs. You could see there are changes. So this is how each and every reporting method, that is GAAP, changes from that of IFRS. The next concept that we are going to see is integrated reporting. So integrated reporting is wherein there is a combination of reporting of both financial statements as well as the other data of the organization. What are these other data? The other data include the management strategy, the governance, the environmental and social data, and other corporate communications. So integrated reporting is a combination of both financial reporting as well as corporate social responsibility reporting, or it is otherwise called as sustainability reporting of the organization. So what are all the data that is shown under integrated reporting? You will see financial data for sure, and you will see environmental data such as the carbon emissions, the energy consumption, the water consumed and water recycled data. Okay, all such environmental data being reported along with the financial data. You would also see any innovation that is used in the company. It also used in the CSR reporting or integrated reporting. You will see data on social data, which is employees data, what kind of labor practices, unique labor practices, and how far the organization is taking good care of the wealth and health and well-being of the employees. It's also shown under these data. And you could see the waste reduction data as well. So environmental data, financial data, human data or social data, and other communication of the organization is also done through integrated reporting, and it's a combination of both financial and sustainability reporting of a company. So to summarize, what did we see today? We just saw about financial reporting unit 1, under which we had 3 concepts. One is IFRS, other one is GAAP, and other one is integrated reporting. IFRS and GAAP or reporting method, these are set of rules and principles that helps companies to prepare financial data as well as to present financial data in a uniform, in a transparent manner. IFRS is universally applicable. It is applicable in 120 nations across the world, while GAAP has been adopted only by American companies. And integrated reporting, it is a combination of both financial data and sustainability data. So generally, the data that are shared in integrated reporting are organization strategy, the financial performance of the company, the governance, and the environmental and social data of the company is being reported in integrated reporting. So I think with this, you had an idea of what this financial reporting is all about and what are all the international standards being used and what is integrated data. Okay, so see you again in the next video. Thank you so much.